Ravenwolf Capital.
At its meeting today, the board decided to leave the cash rate target unchanged at 4.35%, and the interest rate paid on exchange settlement balances unchanged at 4.25%. Inflation continues to moderate but remains high. Recent information suggests that inflation continues to moderate, in line with the RBA's latest forecasts. The headline monthly CPI indicator was steady at 3.4% over the year to January, with momentum easing over recent months, driven by moderating goods inflation. Services inflation remains elevated, and is moderating at a more gradual pace. The data are consistent with continuing excess demand in the economy and strong domestic cost pressures, both for labor and non-labor inputs. Higher interest rates are working to establish a more sustainable balance between aggregate demand and supply in the economy. Accordingly, conditions in the labor market continue to ease gradually, although they remain tighter than is consistent with sustained full employment and inflation at target. Wages growth picked up a little further in the December quarter, but appears to have peaked with indications it will moderate over the year ahead. Nevertheless, this level of wages growth remains consistent with the inflation target only on the assumption that productivity growth increases to around its long-run average. Inflation is still weighing on people's real incomes and household consumption growth is weak, as is dwelling investment. While there are encouraging signs that inflation is moderating, the economic outlook remains uncertain. The December quarter national accounts data confirmed growth has slowed. Household consumption growth remains particularly weak amid high inflation and the rise in interest rates. After recent declines, real incomes have stabilized and are expected to grow from here, which is expected to support growth in consumption later in the year. Meanwhile, growth in unit labor costs remains very high. It has begun to moderate slightly as measured productivity growth has picked up in the past 2 quarters, but whether this trend will be sustained is uncertain. The central forecasts are for inflation to return to the target range of 2 to 3% in 2025, and to the midpoint in 2026. Services price inflation is expected to decline gradually as demand moderates and growth in labor and non-labor costs eases. Employment is expected to continue to grow moderately, and the unemployment rate and the broader underutilization rate are expected to increase a bit further. While there have been favorable signs on goods price inflation abroad, services price inflation has remained persistent and the same could occur in Australia. There also remains a high level of uncertainty around the outlook for the Chinese economy and the implications of the conflicts in Ukraine and the Middle East. Domestically, there are uncertainties regarding the lags in the effect of monetary policy and how firms' pricing decisions and wages will respond to the slower growth in the economy at a time of excess demand, and while the labor market remains tight. The outlook for household consumption also remains uncertain. Returning inflation to target within a reasonable timeframe remains the board's highest priority. This is consistent with the RBA's mandate for price stability and full employment. The board needs to be confident that inflation is moving sustainably towards the target range. To date, medium-term inflation expectations have been consistent with the inflation target, and it is important that this remains the case. While recent data indicate that inflation is easing, it remains high. The board expects that it will be some time yet before inflation is sustainably in the target range. The path of interest rates that will best ensure that inflation returns to target in a reasonable timeframe remains uncertain, and the board is not ruling anything in or out. The board will rely upon the data and the evolving assessment of risks. The board will continue to pay close attention to developments in the global economy, trends in domestic demand, and the outlook for inflation and the labor market. The board remains resolute in its determination to return inflation to target.